Good morning, Big Wave Trading family. Hopefully everyone is already fully long or at least heavily long this uptrend because my scans, despite the market hitting new highs in the Russell 2000, S&P 500, and NASDAQ on Tuesday, my scans and long scans kind of look like this NASDAQ chart. I got a lot of V-shaped wedging, low volume moves. So despite the strength in the market short term, because everything has been so weird as I have gone over ad nauseum in these video lessons and in the new long positions section every day for the past 2 weeks, there's just really not a whole lot to go out there and get long heavily with a lot of confidence basically right now. I wish there were more beautiful patterns. I wish there were only a few stocks that would trigger with beautiful patterns and amazing, excellent reward to risk ratio setups. But instead, we keep on ending up with more stuff like OLED. So OLED, long-term favorite of mine, really like it, but it's always been very difficult to get a safe long position trigger in and then hold that signal once I am long. But OLED is making a pocket pivot point signal very close to its 50-day moving average. And while it's not perfect, there's some pretty clear risk levels, so I'm going to give it a shot. Now, OLED is a very high quality CAN SLIM stock. It is also a perfect speculator scan stock, and it's extremely high quality because it makes all three of those various perfect speculator scans that I have different parameters for each of them. So it's a very top quality stock in the stock market. What are the problems? Well, we've got a few. Do you see any green bop in this chart? Do you see any huge accumulation on this right side? No. So already we're talking about a pattern that isn't that great. We just have a pattern with a great possible reward if it makes any kind of similar measured move to any of the previous moves you see here in 2017 to the inherent risk by following these instructions. 125.10 limit order. That is what I am doing on Wednesday. My first cut loss is 121.05. My final cut loss is right below the 718 low of day of 117. Oh, excuse me. I'm going to go back a little bit further because it's right. It's just slightly lower. I'm using the 714 low day, 117.15. So if it trades at 117.10, I'll be all out of OLED. The other problem, stock is extended from its 20-day moving average, that magenta line. The other problem, earnings are next week. It's more than 5 days, but it's still close enough that you don't want to have a large position. So initially, since this thing wasn't confirmed in any other side scan, it's supposed to be a 4% long position. It's extended from the 20-day moving average, so half that to 2%, and earnings are next week, so half that to 1%. Now, I don't even have that much capital to allocate this because if I want to max out the rest of my positions, I have to drop the asset allocation into one of the stocks I decide to go long, and I'm picking this one since it has earnings next week. So if this one does what LECO did, remember I took a long position in LECO right here. I stated that earnings are next week. I know what my risk is. I've seen the previous gap downs. I'm investing accordingly. It's only 1% of my capital, and I'm probably going to be, it was actually 0.5% because we had the half of it because of earnings, and I'll probably even do less. I did do less than 0.5%. LECO did end up failing, and my losses were very small because my position was very small. If the stock would have gone up the other way, my gains would have been small. Still, any gain is better than no gain. So you don't know what a stock's going to do until after the fact. So with LECO, it was worth it to me. A little dangerous, but if I would have gone big, that would have been foolish. Same with OLED. So I'm keeping it small, 1%, 125.10, 121.05, 117.15. Then there's SGH. Now, I had a IPO long signal in URGN the day before. As you can see, it worked. It was higher on the day, above average volume, and BOP went in the right direction. That's exactly how you want to see a stock follow through. So we'll see if SGH can do the same. It's a stock that I've been watching since right here. So right here, you can see how it broke out or started to break out with green BOP. Boom, it's on my IPO radar. Pulls back on green BOP with green BOP increasing. Boom, it's on my radar as a stock I want to get long. Then it had this move here, really small volume, and BOP fell, so I wasn't interested in a long position here. Good thing, would have been shaken out today. Following this move and pullback, it had some wild intraday price action, but you can see BOP is steadily stair-stepping higher with a higher green today, well above average volume if we use like the average volume of the last 20 days, which is not on this chart, and a pocket pivot point signal. So I want to get long SGH tomorrow morning or today for anybody watching on the mainland. Obviously, I'm in Maui, so I'm making this at nighttime. 1641 will be my limit order, the high of the day, since it's intraday price action touching the 20-day moving average. First cut loss level right here, this pocket pivot point signal day. 1543 moves below 1543, I'll be out of half. Final cut loss level, this move right here, 1481. So SGH was in my IPO scan. It's a 1% long position. And the kind of helped them let it go is why I went long URGN, is because URGN had a composite rating, despite it being a recent long and having poor EPS, of 89. Well, SGH has a composite rating of 82. So while it isn't as strong, it's still above 80, and that's always, if I want to get long a stock and it's not quite IBD, earnings per share, relative strength, profit margin, blah, 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 everything that Investors Business Daily goes over, and MarketSmith, if it's not perfect, I look for that composite rating. If it's above 80 and it's got a chart pattern like that, it's a go. So 1% of my account capital into SGH. But the most important signal, the last one, TVIZ. Now, TVIX and UVXY showed up in my ETF scans. Notice that they were higher on the day with the market higher. That always piques my interest, and I always see that as a sign that the market is starting to turn before the actual price of the averages is turning. So with TVIZ, out of all three of those, this is the best looking pattern. You can see TVIX, UVXY, a lot of red in that chart. TVIZ, it was reversed today with a big surge in BOP volume and the price action. Opened at the low, closed at the highs. That's a perfect intraday candle right there. And so I want to get long. TVIZ, 1359. Not paying any higher than it. Not chasing it. 1359 is my only limit. And then moves below 1332. That's the final cut loss level on an end-of-day basis. Me, these fixed hedges, because I never know if or when the market's going to crash. We're heading into August, September, and October, a seasonally extremely weak period of stocks. It appears that the market churned on Tuesday as heavier volume. Let's look at the NASDAQ 100. What did I tell you it was going to do? I told you after the 12th straight up day that with this below average volume, what normally comes is a heavier volume sell-off. Well, it ended up being a heavier volume churn, and that happened up here, and that led to a sell-off. So if we start selling off, guess who won't be surprised? Me. So keep all that in mind. That's why TVIZ and hedges will start to be the priority. If you're fully invested, let's say you only have like 2% of your account capital left and you don't know where to put that money in, TVIZ. It's simple for me. Fully invested, starting to get hedge signals, the hedges take priority. Right now, I only have one hedge on my books, SOXS, and that's it. So if the market crashes tomorrow, or today, excuse me, or Thursday or Friday, I won't have any kind of hedges to protect me. But if I start building hedges now via the small signals, and then the market does crash, let's say in August, September, October, flash crash, whatever, 5% pullback, 10%, 15, 20, 50, I don't care, whatever. Whatever, a pullback is a pullback to me. I will at least have a position and know that my long positions at least are hedged to some degree. So we'll see how it all plays out. Right now the market's very strong. I don't like how we're just gradually moving up in that wedging formation, and the trade today in the NASDAQ 100 I think is very telling. Now I know it was all related to Google, but this could easily spill over into the rest of the market. But the good news is the Russell 2000 looks very strong. None of that kind of poor action is evident at all. But look at this most recent uptrend in the Russell 2000. Not good. We'll see how that ends up. I'm hoping it's a lower volume pullback. Seems hard to believe. A test of the 50-day moving average and a move to new highs. But if we keep wedging up, I think eventually we're going to have a hard fall. We'll see. Just be prepared, everyone. Aloha.